Let's start with Lululemon. This stock taking it on the chin here in the pre-market, down 12%. So if that holds, Lululemon's going to hit its lowest level since 2018. Wow. The stock has declined 40% so far this year. It's one of the worst performers in the S&P 500. So why? All right. Well, the most recent news. Yes, Tom wants to say something.
I'm listening. No,
this is him listening. Okay.
Listening.
They lowered their annual forecast. Yep. Deteriorating demand in North America. Revenue and profit guidance for the current quarter also below expectations. So here are the problems, and they are piling up for Lululemon. Increased competition from brands like Alo. I passed their store the other day, just yesterday on Fifth Avenue. Bunch of people in there. Spate of poor product launches, like those see-through leggings. Who wants to wear see-through leggings?
I tried.
They're also facing a probe from the Texas Attorney General's office over the alleged use of forever chemicals. Then you've got their billionaire founder, Chip Wilson, criticizing the company.
Can I ask a dumb question?
Yeah, do it.
Are they just out?
I feel like with the young kids, they are. They used to have a cool factor and the edge, and I feel like something's missing.
That's CFA. That's CFA.
Are they out? Yep.
There you go. And so they're getting a new CEO, Heidi O'Neill. So she definitely has, her work cut out for her when she takes over in September. Let's move on to DocuSign.
Love this
ticker symbol DOCU, down 4.6%. It is off 25% year to date. This is an electronic signature company. Wow. Reported a rise in first quarter profit yesterday after the market closed and guided for a slight increase in revenue. And here's when you get into the minutia. The annual recurring revenue rate was unchanged, like between 8.25% and 8.75%. And investors might be disappointed by that. They want sort of a timeline for when DocuSign is going to return to double-digit revenue growth. But overall, an analyst over at Jefferies said, these results from DocuSign, they show a good start to the year, especially given the lack of any negative AI impact. I mean, I think that's as good as we can hope for now, as these companies are not coming out and saying, we've been, clobbered by AI.
Yep. All
right, and let's move on to actually a triad of companies that are being hit by what's happening with Bitcoin. So these cryptocurrency-related companies, Coinbase, Robinhood, Strategy, they are all lower in the pre-market. This is as Bitcoin now drops about 2.5%, so just below $62,000. It was lower even earlier this morning. And by the way, it's not just Bitcoin. I checked out Ether, lowest level in over a year now, falling more than 8%. To 1625. But look, it all started on Monday, right? When Strategy announced it sold a small sum of Bitcoin for the first time since 2022. And their head, Michael Saylor, remember, had said, I'm never selling. So I think that really freaked the markets out.
Yeah, I agree with that. But what else is going on? And I don't have a straight answer.
I don't know. They're seeing a lot of outflows from these cryptocurrency ETFs.
From ETFs, is that what Bill Chunas and company say?
Exactly.